Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 2nd of July 2022, and we're publishing our gold and silver weekly update for the week ending the 1st of July. We will see that gold and silver prices were under pressure last week, and silver particularly on Friday. Why? Well, let's take a look. Gold fell $18 last week, falling from $1,828 to $1,810, having hit a high of $1,841 and a low of $1,784, a fall of just 1%. In sterling terms, gold finished the week at £1,496. That's actually up £6, thereby showing the weakness of sterling against the dollar. And in euros, it closed at €1,735. That's up €3. Silver fell $1.26, falling from $21.18 to $19.92, breaking that crucial $20 level, having hit a high of $21.56 and a low of $19.40, a fall of 6%. In sterling terms, silver closed at £16.45. That's down 82 pence on the week. And in euros, it closed at €19.10. That's 19.10 euros. That's down 0.97 euros, or almost a full euro. Obviously, the gold to silver ratio went up, and it rose from 86.3 to 1 to 90.9 to 1. We're now entered into this 90 to 1 territory once again. Now, looking at the prediction we made last week, this is what we said. Quote, we expect to see gold trade between 1780 and 1880, with 1765 and 1900 as outliers, and we forecast silver to trade between $20 and $22, with 1950 to 2250 as outliers. Well, gold traded within a range of $57, that's between its high and low, and so operated well within our predicted forecast. Silver traded broadly within our main forecast, but had a proportionately higher difference between its high and low of some $2.16, and so moved into our outlier range. Now we can see that silver's been under significant pressure, and frankly just proves all those pumpers who in the last month alone again began promising breakouts to the upside for silver. They're just shills talking up their book. Precious metals are on the downside with increasing rates, and if the Russia-Ukraine war should suddenly come to an end, though we're not anticipating that, of course, then the geopolitical risk investment in gold and silver will also abate, causing potentially even lower prices. Though, to some degree, that could be offset then by the world's economic recession slightly improving. We have to bear in mind that precious metals are still at a slight premium because of this conflict and the fear of where it could potentially lead. Now, looking at some of the other financials, Bitcoin's fallen this past week, in fact by over $2,000, and currently stands at $19,033. Equities also fell last week, but by a more modest amount. The Dow Jones closed on Friday at 31,097. That's up 321 on the day, but down 403 points on the week. The S&P 500 closed at 3825, up 40 points on the day, but down 86 on the week. And the Nasdaq Composite closed at 11,127, up 99 points on the day, but down 480 points on the week. Now, Brent crude closed at $111.63. That's down $1.49. And WTI crude closed at $108.43. That's up 81 cents for the week. There was an anomaly between these two prices last week, and as we suggested, they've corrected themselves somewhat. The dollar index, which is something we should be noting quite closely, now stands at 105.14. That's up 0.96 points on the week. That's almost a full point. Now, in our report last week, we stated very clearly that the PCE data due on Thursday would be crucial for precious metal prices if they were higher than expected? Well, to be fair, they were marginally lower than anticipated, but not enough lower to throw the Fed off its current hawkish stance. Markets realised this a few hours after the announcement, which is why to some degree we saw a sell-off in gold and silver prices Friday morning, while the US dollar rose above the 105 level. Nominal and real consumer spending, though, were lower than expected, though manufacturing data was broadly in line with expectations. Now, taking a quick look at the economic data being published this coming week, Monday, of course, nothing scheduled as it's Independence Day, and we wish all our US followers a happy Independence Day, of course. On Tuesday, we have factory orders for May. Then on Wednesday, S&P Global Final Services PMI for June and the ISM Services Index for June, worth noting, and the FOMC minutes. Thursday, we have the traditional weekly jobless claims, plus foreign trade balance for May. And then on Friday, the crucial non-farm payrolls for June, unemployment rate, average hourly earnings. And also we have the consumer credit figures for May, though these will be dwarfed by the non-farm payrolls. So traders will be watching the services PMIs on Wednesday and the FOMC minutes to get further guidance, although I think most of what the Fed intends to do has been pretty clearly conveyed to the public already. But Friday's non-farm payroll report is the crucial data for the week. With expectations of 250,000 new jobs anticipated, any major variation will either confirm a 50 basis point increase in rates or more later in July, or just a 0.25% increase. We believe another 0.5% is likely based on data announced so far. Well, let's just take a quick look at gold and silver prices from a technical point of view. Well, gold's movement is going to be determined by the view traders take as to whether Jerome Powell can create a soft landing for the economy or whether stagflation will dominate. If it's the latter, gold will remain underpinned. However, we take the view, at least short term, that the Fed has no alternative but to continue its aggressive stance by raising rates and looking to reduce the size of their balance sheet at the same time. This will create an economic tightening, something perhaps the politicians will not like, but with inflation showing little signs of abating, there really is no alternative. With the FOMC interest rate decision due towards the end of this month, which is the 26th, and then the announcement on the 27th, there is of course going to be a lot of speculation. That said, we simply cannot envisage $1,900 gold for some time, and fear that should it dip below $1,800 again as it did last week, then a fall to $1,750 is most likely. And if that breaks, then $1,700 underneath. Though we are expecting support at $1,750 at least for a week or so. Resistance will clearly kick in at $1,850 and very strong resistance at $1,880. Some analysts believe that Friday's fall and then $24 recovery towards the end of trading marks a pivot point and could see higher prices. That may happen on Tuesday morning, but once the economic data is released and Friday's payrolls announced, we're expecting further falls in prices. Silver prices basically collapsed, and some analysts who were predicting $40 to $50 silver just over a year ago are now saying it could easily fall to $18 if not $16, and long term even down to $12. We're not quite that pessimistic, though one has to say that $12 silver would present an amazing buying opportunity as it did a couple of years ago, if one is prepared to hold for 10 years or up to 10 years or more. For many months we banged on about industrial demand, and last year we saw quite a pickup. This year, however, according to insiders and what they've been telling us, the picture is not so bright. If we have a global recession, then the picture will become abundantly clear to all of us as to what's going to happen to silver. To the upside, we have strong resistance at $22.50 and strong support at $17.50. We're expecting silver to go lower by the end of the month, but this coming week may see either consolidation or slightly lower prices. Of course, geopolitics could affect this situation in either direction, but all things remaining equal, we expect the dollar to remain firm or even strengthen throughout July, and precious metal prices to weaken further. With all this in mind, we expect to see gold trade this coming week between $1,750 and $1,850, with $1,725 and $1,875 as outliers. We forecast silver will trade between 1850 and 2150, quite a large margin because we're seeing now these margins between highs and lows increasing, with 1750 to 2250 as outliers. What do you think? Do share your thoughts. Can you envisage silver going down to $12 perhaps before the end of the year? Be interesting to hear what you think. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to the channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. Happy Independence Day for our American colleagues on Monday. And finally, we wish you a safe, enjoyable weekend, a prosperous week ahead, and a reminder that we shall be reproducing this video under a different title and thumbnail tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.